Good morning. Well, for over a week now, we have seen a strong rally in the bond market, and that has translated into better rates for mortgages. Good morning, Brendan Rendo. I'm here, part of the Orlando Real Estate Buzz, and thank you for joining us this morning. My associate, Joseph, not feeling well today. He's been under the weather for a couple days, so hopefully he's much better in time for Thanksgiving and gets a chance to enjoy the turkey. Thank you all for joining us this morning. And we wanted to hop right in because we got a couple big numbers over the past couple days. Number one was the Consumer Price Index. And this came in lower than expected, only about 1/10 of a point lower than expected, but it was enough to help the market rally overall. And then this morning, we got the jobless claims number, and that number came in higher than expected. So we came in with initial claims of 231,000. That was 13,000 over last week's number. And then our long-term insured has climbed to almost 2 million currently. So the job market is softening up as well. So when you're looking at both of these, it has translated into something that is always nice to see on the charts, and that is a reduction in the 10-year T. We've seen a pullback to under 4.5%. So we've gone from a high earlier in the month of almost 5% to now down to under 4.5. And it really has helped pull back interest rates overall in the market. And you're seeing, a small surge, not a huge surge, but a small surge in the mortgage applications. Because that difference overall, if you're looking at it, if we go from an 8% to roughly a 7.45% interest rate, you see a fairly significant pullback in your monthly mortgage payment. Comes out to about $152 in just principal and interest. And some people may be saying, well, that doesn't seem like a whole heck of a lot. But for some people who are right on that border, remember the debt to income ratio that is currently out there is higher than it's ever been historically. You've basically got to make over $100,000 a year now to afford an average home. And that's, affordability is still one of the biggest issues that we have out there. And you're going to see that that's one reason why we continue to have an inventory grow for homes over the past several months, because once those rates hit a certain point, it's very hard, for people to pull that trigger and say, yeah, I want to do this. Because when you look at your rent versus what a mortgage payment can be, in many situations now, that has reversed, where the rental is less expensive than purchasing a home. And it hasn't historically been that way. Normally it's been better to purchase than it has been to rent. You never want to be paying someone else's mortgage. That's just not something that you want to do on a regular basis. So we've seen that. And the other news that we've seen is retail sales in October were flat. So we're going into the holiday season, and all that spending that went on during the summer has really pulled back. So you've got three significant factors going on right now. You've got inflation, which is pulling back, slow, but it's pulling back. You've got jobless claims, which Powell has mentioned several times, that's one of his leading indicators on whether or not to continue to increase interest rates. You see that pulling back. And then you've got consumer spending pulling back. So all that is really pushing. And what we're seeing is overall is 99%. There's a 0.3% who think he may raise rates. But coming into the December meeting for the Fed, again, no one believes that he's going to raise rates at this point. No one's going to believes it. And you're seeing that in the stock market, where you're seeing a rally in the stock market. But going forward, this is interesting as well, because going into the January meeting, people don't feel 95% don't feel that he's going to raise rates. And you're starting to see that people, it's only 4%, very, very small minority, feel that he may cut rates a quarter of a point. But then you get into March, and all of a sudden in March, you go where 63% of the people feel that he's going to hold rates, that the Fed's going to hold rates, to a 35% chance that we're going to have a rate cut in March. So that's interesting, because that could change a lot of things going into the spring selling season for housing. So that you may see those interest rates pull back a little bit, and where we've been extremely flat on sales, you may see that push up a little bit. And again, that's something that we've talked about many times, in that historically the margin between the 10-year treasury and the mortgage rates, the 30-year mortgage rates, sit about 1.5%, maybe 2%, and we're sitting at 3%. So could we see a surge where lenders start loosening up a little bit? I mean, you think about it, even if they pull back to a 2.5% margin, that's, from some people, between the Fed rate cut, the pullback by lenders, you could see a $300, $400, $500 a month savings for home buyers going into the spring. And that would really reignite what has become a very stagnant market overall. So that's what we're seeing overall on the economy right now. And then some other good news that we have is, right now, check this morning, Hometown Heroes, which again is a fantastic down payment assistance program for first-time buyers here in Florida. If you haven't owned a home in the past 3 years, you qualify. You need a 640 credit score, you qualify, and you have to be full-time employed. What that they're looking for is roughly 35 hours a week is considered full-time employment. There are still funds available, where in July, when this originally came out, those funds went like super fast. But interest rates were also about a point and a half lower than they are now. So you can see how that is affecting the market as well, where these funds may have been gone in, probably a week. There are still funds available. Take advantage of it. It provides you up to 5% of your loan amount, or purchase price, towards down payment assistance. That can be used for putting extra money down, could be used to pay for all of your closing costs. It's a very good program. And the other big benefit is that the interest rates are subsidized a little bit. I believe this morning, checking, the FHA rate was at like 7.25%, which is a little better than what the going market is. So take advantage of it. Talk to your lenders. If you don't have a lender, reach out to Joe and I. We love to help you out with this program. It's just a great program to help people get into homes. Then let's hop into our numbers for this week. Overall, we saw a huge decrease in both home sales and in condo sales. We dropped nearly 100 homes for the first week, over the first week in November. That's a big drop. That's a significant drop. And we've also we see our inventory increasing again. So when you look at our chart, we're going to see inventory is continuously increasing. And then this one really kind of hurt, and doesn't surprise me though, is the condos We only had 86 homes sold last week. 86, that's it. And our inventory has shot up again. And you're really starting to see, if you're getting updates on a daily basis, you're starting to see a lot of price decreases. In Altamont Springs, over the past 7 days, I sent out information to a number of clients, and there were roughly, I believe it was 49 price decreases in Altamont Springs listings alone. So you're seeing that market soften, and that's why a lot of people are saying this may not be a bad time to purchase a home, because when you're looking at what the economy is doing, and I can actually kind of agree with several experts that I think we're going to see the bond market pull back probably about a full point. So if you can get the home now, negotiate a better price before spring starts, when you got more people out there on the market, you can look at doing the refinance. And sometimes there are lenders out there who may offer you um, a low cost or no cost refinance if you work with them now. It's something to ask them. Hey, if rates drop in the next 6 months, can you help me refinance? If I come back to you, what will you do for me? Is there anything you can do for me? That's a great question to ask them. And then we're looking at the metric that we look at every week, which is original list to sales price. And you see, again, we're down below 95%. We're down to 94.42 on the original to list. And then our final list, 97. So we're pretty much holding there overall. But that's a 6%, almost a 5.5% decrease over the original price. Again, when you're out looking, think about that. Work that in your head. It's like, okay, so this was listed, they haven't done a price drop yet. Let's calculate maybe what we can get. So maybe we can get the 3% seller contribution, get all of our closing costs paid for, and also get a little bit off the price as well. There's room in there to negotiate. And as that inventory continues to rise, there's going to continue to be more opportunity for you. And with the number of buyers still, even with a little bit of a surge in mortgage applications, it's when you're coming off a low, a little bit of surge doesn't mean a whole heck of a lot. So there's not the competition out there for you right now. And here we are looking at our weekly sales, and you see the period average has dropped to 408, and you just see it. It goes down here to 297. That's actually, I believe, the lowest number of sales for any week in 2023 so far this year. And I wanted to go back and check something, because I'm curious. That period average continuously moves up and down. So I went back a month ago, and you can see our period average was 433 homes. So we are on a continuous downward slide right now on the number of homes being sold this month. So again, it's information that you want to know when you're out there shopping for a home, knowing that, hey, I can hold. Let me get a little aggressive on some of these houses. And then we look at our inventory again, and it's nice to see, especially from a buyer's perspective, but it also is very important to look at from a seller's perspective. If I'm looking to put my home on the market right now, what do I need to know? I need to know that the average days on market is consistently staying above 40 days. And you can see it here, except for the 1 week of the 22nd, we have pretty much since mid-September been consistently over 40 days on the market. So you have to plan for that. And then you look at our inventory, and there's more competition for your home out there. So you got to make sure, hey, is it clean? Is it prepared? Have I decluttered? Have I really made it show ready for people to purchase a home? to come in and make an offer on my home. I actually did a video for a client uh, on um, on Sunday, and the house was nice, but nowhere in there did they address that the swimming pool was completely pitted. It wasn't just one spot, two spots. It was around the entire perimeter of the interior of the pool. And first thought is wow, um, that's going to be probably these days $7,000-8,000 expense for my client right off the bat, because nobody wants to hop into a pool and have scrape their feet where it's been pitted. And it's something that, as a listing agent, I feel should be addressed up front. Either one, have the seller take care of it immediately and let them know that, hey, this is gonna pull your value down, because people are gonna look at it and this is an expense that I'm gonna have right off the bat. Or two, they're gonna try and negotiate it in in the price of the home right up front. Hey, I've got to replace, you know, the pool uh granite. So, and I know, I've gotten, you get two, three estimates and it's going to cost, $7,000, $8,000. So it immediately, what was a very nice home, the value mentally for any buyer walking in drops immediately. First thing is, okay, we need to negotiate, or it's just like my clients, like, oh, I don't want to deal with that. I just don't want to deal with that. And that's one of the biggest things with buyers these days, is they want to come in, they want to be able to just put their stuff down and not have to touch anything. And you got to think about that as a listing agent and as a home seller, because you want to make sure your house is prepared. Go through it. Have a handyman come out, you know, and because there's things that you've gotten so used to, you may not see. So you've got to have another set of eyes to look at your house overall. I suggest often that you have, as a listing agent, that you have a home inspector come through your home. Try and take care of anything that may pop up in the buyer's home inspection up front. Plus, you can give it to them. Hey, look, we did a home inspection. We addressed these items right up front, and it's a level of comfort for the buyers. It's prevention over reaction. You can't get everything, but you try and prevent any objections for your house right up front. Then we hop in to our weekly sales here for the condos, and this was very, very surprising. And you see right here, number of sales for condos. Again, this is the lowest number of sales for a week in 2023 in Orlando. And that's only 86 condos. I know I've been showing condos to a couple different clients, and the listing agents just keep calling, keep calling, keep calling. And you're actually seeing the list price on new ones coming on the market lower than what you have seen over the past couple months. So there's opportunities in the condo market, and you just have to know where they sit, where to negotiate them, because you'll see, the condos, they're sitting about a 5% discount off the original list price as well. So for buyers going into, through the rest of November into December, December's always been a good month for me. But right now, I think for buyers looking forward, especially when you look at where most people feel that the Fed is going to be, and I think we finally are starting to see all the effects of all their tightening that they've done over the past year and a half. We're seeing, really some numbers within the economy starting to show us that, yeah, we're slowing down, and we may have actual recession numbers come in. What a lot of people don't realize is that if we took out government deficit spending, our GDP would drop probably I believe it's in the 4 or 5%. So where we may have a 2% growth in GDP, you take out the deficit spending of our government, we're actually a negative on our GDP. So those are things to look at. And we've got other items going on in the market that we'll continue to keep an eye on. One of the main ones is delinquency of commercial loans. They are continuing to increase, and we've had one of the highest levels that we've seen in several years. That report just came out before I went live. So keep an eye on the market. If you have any questions, please always feel free to reach out. Thank you for joining me. Please like and subscribe. And next week is Thanksgiving, so you won't see us next week. Maybe we'll do a special one on Wednesday morning. All right. Take care and have a wonderful and blessed day. Bye-bye.